Investing Network. We are talking how Domino's wants you to deliver your own pizza. And we'll dive into what's going on there and whether this is a trend that will catch on.
Yes, Nicole. And in our quick pick stories, we're talking about how Bored Apes broke the blockchain, selling 55,000 Metaverse parcels for $320 million, crashing the Ethereum network. We will also touch on Warren Buffett's annual shareholder meeting, and he had some spicy hot takes, including how he got rich off retail investor gambling. And last but not least, the renowned podcaster, host, and crypto investor, Natalie Brunell, joins our show to share her Bitcoin journey, Nicole.
So stoked for that. So stick with us, and of course, subscribe below, hit the notification bell, and let's get into it. So our big story today is about why Domino's wants you to deliver your own pizza. But before we get into that, let's get into our stories that caught our eye in today's quick picks. Delano, what's on your radar?
Yeah, Nicole. So Warren Buffett held his annual shareholder meeting this past weekend, and the event had some spicy hot takes, which he is known for giving. First and foremost, Warren told us that he got rich off of the gambling environment from retail investors. Obviously, retail investors are supposedly not professional, smaller, usually mom and pop investors. And he said because of this gambling mentality, he was able to scoop up stocks for cheap, particularly in the energy sector. He had a sizable position of Occidental Petroleum, and that is something he said. Also, Warren said that inflation, which we all know right now, is extraordinarily high. And he said it's a result of the government sending out lots of money in the COVID lockdown response, but obviously we know that was needed. But he had some reasons as to why that has pushed up inflation. And last but not least, of course, he's sticking to his guns. He stated he prefers productive assets over digital currency. So he's sticking with his guns, as well as his right-hand man, Charlie Munger, saying they're not getting involved in cryptocurrency, Nicole. We know that this is just a big meeting. They fill up an arena when these two come to speak. And he had some spicy hot takes, which we may or may not agree with. But what did you think of his annual shareholder meeting?
I mean, I'm still stuck on the first point that you made, Delano, about him saying, like, was he trying to say thank you? Was that what was happening? Did he need to say thank you? Maybe I should share the wealth that I've made because of your gambling mentality. That's like a wild statement. Maybe I should have checked Twitter on what is going on there, because is anyone buzzing about this? Because that's kind of crazy. Yeah.
Exactly, Nicole. He's known for being a value investor. So he pretty much is going after investing in places that he believes are, undervalued. And yeah, that is a kind of a shot at all the people that have been investing over this period and said, hey, you guys did it wrong. I do it right. And I guess, can we even say poke holes at him because he is one of the more successful investors over history? But yeah, that was a direct shot right there.
I know, right? I don't know. I mean, and it's I get it. I also want more, almost synergy, I guess, or a little bit more, we coexist peacefully,
exactly.
I guess, when it comes to this, as opposed to old dogs versus new dogs. But we'll see. Or Wall Street versus Main Street. So we'll see how that pans out. The Bored Apes broke the blockchain over the weekend. Yuga Labs, the Bored Ape Yacht Club creator, raised $30 million in crypto when it sold off land parcels in its virtual world Saturday night. Holders of the ApeCoin token raced to buy deeds for 55,000 parcels of virtual land in Otherside, which is the project's planned Metaverse game, and the latest extension of the Bored Ape franchise. And demand was so high that it caused activity disruption across the entire Ethereum blockchain. Plus, transaction fees to mint other deed NFTs soared to about 2 Ether or $6,000 after the launch. Crazy? Over the weekend too, y'all. I'm not looking at my apps on the weekend. I'm trying to, but anyways, that's just me.
They had such a huge, successful demand for this launch. I was even watching on social media. So Des Bryant is an all-pro Cowboys wide receiver, retired now. He posted 2 of the other Ds that he tried to make a transaction for, but he lost out because he didn't. And he said he had to pay those gas fees, and he still didn't get the 2 Ds he tried to get. And he's a Bored Ape Yacht Club holder, NFT holder. So they obviously have said that they did this wrong. They tweeted automatically that we did this wrong. One, people said they could have tiered, people minting, right? That's probably would have helped a little bit with the gas fees. They're also talking about moving to their own chain with their Ape coin. So this was obviously a little bit bungled, and they talked about it, right, Nicole? Like they bungled this a little bit.
Yeah, well, it's a wild thing. I think I'm excited to kind of dive into like metaverse real estate more later in the show, because I think this is a perfect precursor to why we need to understand the metaverse real estate game and what's happening there. So we'll get into that in a second.
Yes, we will. But let's move on to our big headline of the day. So Domino's wants you to deliver your own pizza. Domino's reported a soft quarter last quarter, and management had a few reasons why the quarter was slow. But one of them was staffing shortages, which has been shown all over the restaurant industry. So Rich Allison, Domino's outgoing CEO, said that they were implementing strategies to address the shortages. And one of those strategies is to pay you $3 to deliver your own pizza. Yes, a $3 discount on future carryout orders if you order online and carry out your Domino's pizza. And more stats on their report this last Thursday. The numbers that came in subpar. They missed on revenue, which was expected to be at 1.027 billion. They came in at about 1.011 billion, so a little bit lower. I think there's a few reasons. We've talked a lot about this. Restaurants across the country are dealing with shortages. Obviously, since the resurgence of us going back out, people have been having a hard time to staff people. And you're hit on both ends. If you do staff someone, you should be, and you are paying them more. If you're still fighting to get people staffed, you're just like having to struggle. You lose out on that demand and people coming in. I've gone to restaurants, which is okay, and like you're like, hey, we just can't seat you, even though there's empty seats. We just don't have the staff to cover you, and it's such a big problem right now, Cole, across the restaurant industry.
It is crazy. I mean, walk down any street here in New York City on a nice day, and the restaurants, even outdoor seating, is slammed.
Yeah.
And it is crazy to think about how they don't have staff to keep up with that demand. At first, I didn't really get how this is the type of story or type of thing that is that helpful to the company. I thought deliveries made more money for a company because you really feel it on the consumer end. But apparently online carryout orders, they take less resources for Domino's, and the online engagement can be used to promote other offerings like loyalty programs, and offering customers that $3 bonus encourages repeat business. So Domino's is in it for the long game. I totally understand it from that purview. As for the staffing issues, the Bureau of Labor Statistics data does show that people were once really quitting food service jobs in droves. According to the report released on January 4th, quit rates for the accommodation and food service industries grew from 4.8% to 6.9% over the past year, which is a larger jump than any other sector listed. So employees are clearly getting a little bit fed up. Union activity is buzzing. Starbucks, for example, we covered that a few weeks ago, and they're seeking to unionize. So there's a bit of drama here. The restaurant industry has always had high turnover rates, and I think the pandemic just added fuel to the fire to a lot of the kind of pre-existing things that made people want to leave the service industry. Low wages, long hours. It's a really a thankless job, despite them being so important to our economy. So, I think this is a trend. I think we're going to see way more businesses have to pivot.
It's so interesting because when does this come to a head? And our producers put some amazing graphics that show the dip in leisure and restaurant kind of jobs, and then the kind of was climbing up a little bit as well. But the companies are thinking of like how to replace this, because you look, companies they're trying to automate this with delivery and self-delivery and doing different things on that side, and then also now they're starting to pay the customer. So it's like, when does this come to a head? Is there a break even point where people in these jobs say, hey, we would be at this price. And is that low enough for the restaurants and the companies where they're like, all right, this still makes sense for our margin? So that's what I'm wondering is when this comes to a head at some point, because it has to at some point.
Right. And like that dip, I mean, the dip happens, right? Like in the midst of the pandemic, now things are opening up again. And you never know, like people culture-wise, like people could be trying to go back to their service industry jobs and then being like, oh man, this sucks. Like, I remember why I don't like doing this, and like wanting to change careers, wanting to do something more or better. And there's, other options out there. I feel like the optionality in the workforce is like a little bit, it's more open, it's more flexible for the most part. Anyway, so I do hope those people find the right jobs and career paths for them. And hopefully, it's kind of like robots or raises. That's like the vibe right now. For companies, and they need to be on that wave. But let's go ahead and get into our Noble guide. I'm excited for this one. Should you buy land in the metaverse? Forget scrolling through Zillow, drooling over homes on Redfin, or snooping on your friend's pad on Trulia. The next real estate rush might not be physical, but instead in the metaverse. But should you look to buy in the metaverse, and how does real estate in the metaverse actually work? So we're getting into it with our Noble guide. To start, what exactly is metaverse real estate? Metaverse real estate is literally parcels of land in virtual worlds. Otherwise, it is pixels. They're little pixels that you purchase, and they represent land. So, however, they are more than just digital images. They are programmable spaces in virtual reality platforms where people can socialize, play games, sell NFTs, attend meetings, go to virtual concerts, and do countless other virtual activities.
Yes, Nicole. And why do people or companies want to buy land in the metaverse? For one, it is a speculative bet on the future. If you think the future will be like Ready Player One, we're all connected in a metaverse, then this is a chance for the average consumer to get in on some prime advertising and marketing income, potentially make income potentially in the future. Yes, you can literally rent out or do whatever you want with your parcel of land. So let's say you own, a shopping mall. You could set the price at what people are allowed to put on that land, or you could use it to boost your own business by marketing your own virtual shop for people to come and enjoy. So there's a lot of possibilities, and that's, I think, what's driving people to kind of look for, real estate in the metaverse.
Yeah, it makes total sense. Why do companies sell virtual real estate though? So brands can use their virtual properties to advertise services, organize virtual product launches, and provide unique customer experiences. So selling real estate to these companies is a lucrative business. Sales of real estate in the metaverse topped $500 million last year. So far, real estate sales have been concentrated on the big four: Sandbox, Decentraland, CryptoVoxels, and Somnium. But for example, Republic Realm paid a record $4.3 million for land in the largest metaverse real estate platform, Sandbox. The company is developing 100 islands called Fantasy Islands with their own villas and a related market of boats and jet skis. And 90 of the islands sold on the first day for $15,000 each. And some are now listed for resale for more than $100,000. So it basically is just a cash cow. So that's why companies sell virtual real estate.
So how do you go about buying and selling in the metaverse? So one thing you need to do is obviously go to the Metaverse platform and explore their property marketplace. So obviously we've mentioned the popular ones being Decentraland and Sandbox. Go to whatever suits you. Now you want to browse through the different pieces of virtual real estate and compare them on a basis of price and location. You of course review those details. Maybe you click on it and find more about them. Now, before you actually purchase, you must link the Metaverse platform that you're on to your digital wallet. And obviously your digital wallet is similar to like a transactional, platform, right? And one of the most popular digital wallets, and you can obviously do your own research, is MetaMask. You have to link them before you're able to transact. And once you've done that, make sure you have the specific cryptocurrency required for the transaction that of the platform that you're on. So to purchase real estate, you may need to have the cryptocurrency associated with the platform that you're on. And once you've secured, you've converted into that cryptocurrency, you can select and make your purchase, Nicole.
Yeah, really useful information. So what's the benefit of owning virtual land in the metaverse? It is estimated that metaverse real estate sales could reach nearly $1 billion in 2022, making it an asset class to watch for investors worldwide. By purchasing digital land, you could earn an early access advantage to what promises to be a fast-moving and high-growth sector. So just like in real life, you could simply buy your own lots or pixels in metaverse platforms, rent them back to users or companies to earn an extra income.
Yes, and of course, when we talk about all this, what are the risks of metaverse real estate? First and foremost, do your research. Research. In addition to location. So you must know the background and the context of the developers and the people that are associated with the project, and try to find out a little bit more about their future projections and plans for the project. How do you do that? You can potentially join their Discord, follow them on social media, because each metaverse platform is different. And so depending on the theme, you may or may not be able to build a community on that platform. And of course, the big risk is, is this platform going to gain users, right? The price should appreciate with the abundance of users that come, if any come. And of course, you want to be on a platform that is galvanized and builds a community. So you definitely want to do your research, and you want to really suss out every project before you invest in the metaverse, Nicole.
Really good takes here. And now that does it for our No Bull Guide, but we are going to get into our guest today. Super excited for this. Today we are joined by an Emmy award-winning journalist, Bitcoin educator, and host of the Coin Stories podcast. Let's welcome Natalie Brunell to the show. Thank you so much for joining us.
Hi, thank you so much for having me. Really excited for this.
Yeah, so your passion for Bitcoin starts with its ability to be a viable solution to America's wealth and equities, since it isn't centralized like government-backed fiat. So I had to first ask, what are your thoughts on the central bank-backed digital currency and that being a part of crypto's future?
Yeah, so I definitely think that our government is going to head in the direction of this central bank digital currency, which essentially gives government complete control over money. And I am very skeptical and wary about that. I'm a huge advocate and proponent for freedom, especially economic freedom. And I don't like the idea of money that's essentially programmed by the government, which means that they could set expiration dates on it. Like, for example, let's say these stimulus checks were actually programmed as a CBDC. That means that in order to stimulate the economy, they can say, well, we're going to give you $1,200, but it only exists in that account until about the end of the year. So you have to spend it or it disappears. You lose it. So essentially, they can program the money and set certain conditions. They can also incentivize you to shop at certain businesses. Let's say they decide that certain companies are doing really well and getting a blue ribbon, according to the government. Well, they can say that if you spend money at those companies, maybe you get a discount or you pay less. So it really bothers me that this gives more control to the government. We're heading in the direction of authoritarianism, in my opinion, when we talk about CBDCs. And really the antithesis to that is Bitcoin, right? Which has no control, no government, no CEO, no politicians behind it, and really allows the opportunity for people to have a form of money that can't be manipulated or debased. So very cautious about CBDCs.
Yeah, I've always sat in the middle, right? Because I understand, like, what we want is to see that mainstream adoption of cryptocurrency, right? And I totally understand that, the CBDC could help us get there. But I also struggle with, this Bitcoin wasn't created for this reason. It was created to be decentralized. It was created to not be touched by government. So do you see any balance between our current Fed and crypto to help us kind of get to that mainstream adoption? Like, is there a middle ground here?
Yeah, that's a great question. I mean, I definitely think that adoption of Bitcoin is going to continue to grow. And my hope is that places like the United States really embrace this technology and maybe purchase some to put on the balance sheet of our country, because we have such a problem with debt. And at this point, we can never pay back the debt that we have. But if we embrace an asset that is appreciating in the way that Bitcoin is, then maybe we can solve some of our monetary issues. But I do see a future where, the global reserve currency being the US dollar, I don't think that's going away anytime soon, although I do think it's under threat. And we have places like Russia and China that are developing their own currencies. They're filling up their reserves with things that are not dollars. They're commodities and scarce goods like gold. And so I think we have an interesting future ahead where the US's hegemony on money is really challenged by some of these other countries, but still recognizing that for the majority of the world, most people transact in dollars as opposed to other currencies. So I do see a future where, like Michael Saylor has predicted, where other currencies maybe collapse into the dollar, but then many countries maybe purchase Bitcoin for their reserves to sort of stabilize and back up the US dollar currency. And that would be an interesting world where we have sort of Bitcoin as a store of value, but then we have other payment rails, whether that be the US dollar or maybe stable coins on the digital network. So I think it could go in a couple directions.
Yeah, and when legacy financial institutions show interest in crypto, which we're seeing pop up more and more, it does spur these thoughts that mainstream adoption will follow, but so does that regulation and that government involvement. So do you think this is actually good, or does it hurt the future that you see for crypto? Or is institutional adoption overall a good thing?
Yeah, absolutely. I think that there need to be more avenues for the big institutions come in because they do drive so much more adoption and retail awareness of a certain asset like Bitcoin. I think that actually the future is looking bright for Bitcoin as opposed to many of the other cryptocurrencies because Bitcoin has universally been accepted and deemed property as opposed to a security, whereas many of the other tokens and projects out there will be deemed securities, and there's certain risks involved in that and certain disclosures that need to be made by companies that are offering those tokens. So I see a future that's very bullish for Bitcoin when it comes to regulation, and I think we need that recognition when it comes to the Washington, D.C. insiders, because then the institutions do have the sort of green light to come in and invest or put it on their balance sheets. And as the institutions come in, I think more and more people come in, the number grows, and we're already seeing a lot of signs of that. Goldman Sachs just issued its first Bitcoin-backed loan. We have Fidelity allowing people to gain exposure to Bitcoin in their 401ks. So we're slowly but surely moving in that direction despite this very choppy water that we're in terms of the price.
Yeah, and I think, it feels more hopeful, right? When we're seeing more of that synergy between the institutional investors and crypto and reaching that mass adoption that we all hope to see. So how do we balance, all of this with consumer protection? I think that's like where the big question mark is. Does it start with just simplifying the message of Bitcoin? What are some of your takes on just, making sure that everyone understands what's going on? Because there's a ton of noise out there.
Absolutely. I'm so glad you asked because I think that this really puts a spotlight on how critical education is. Because with something like Bitcoin, there are some complicated things that you have to understand, especially when it comes to self-custody, because you have this, on one hand, amazing opportunity to take sovereignty of your financial future, take custody of your money and become your own bank. But there are risks with that, right? You have to make sure you remember your passphrase and you have to keep your cold storage wallet secure. And so some people might be dissuaded from investing in something like that because there are too many hurdles. And then that means you introduce a third party to potentially, hold your Bitcoin or custody your Bitcoin. And that obviously is that third party risk that we need to ensure that these companies have solid backing and that they're following the rules and that they have integrity. So that's where it sort of reminds you of the legacy financial system because we are used to trusting banks like Chase or Wells Fargo. And so I think it's going to be interesting in terms of the future because there's so much competition in the space. You see exchanges popping up and there are some that dominate, but there's going to be competition for customers because as more and more people come in, there has to be an incentive in terms of just making sure that your coins are secure and safe, that some people want to earn yield on them and stake. Some people want, certain options for trading with lower fees. So I think there's going to be a lot of competition and absolutely we have to make sure that these exchanges are doing what they kind of are selling in terms of their products and services to the customers. And safety is going to be number one. You want to protect the money that you put into these investments.
Right. And a lot of it has to do with crypto really needing more clear storytellers. I firmly believe in that. I try to do the best I can on my end, as a journalist too. We need to share these messages that this is more than just a get rich quick scheme. This is something that can really increase financial inclusion. So, and help get more underserved people into financial systems, right? That is like a huge aspect of this. So, from kind of your seat, is that a large reason why you wanted to come and like kind of be a storyteller for the crypto space and spread that, message and simplify Bitcoin, I guess, a little bit?
Oh, 100%. I mean, I really relate to the people out there that look at Bitcoin and they're super skeptical or they're just simply confused because I was the same way. I first heard about Bitcoin in 2017. I invested not understanding what it was and thinking that I was basically either gambling or investing in some sort of stock. And I didn't really appreciate it until I did a significant amount of research. And unfortunately, Bitcoin is so beautiful in its programming, but it's also very complicated. And it really requires that you understand our financial system and sort of the history of money and why it's broken. You almost have to unlearn some of the things you thought you knew in order to appreciate and understand Bitcoin. And that comes with hurdles, right? People are busy, they have their full-time jobs, and they're not really necessarily taking the time to understand why our financial system is broken. But at the same time, being a journalist like you for 10 years, I was sort of seeing the unwinding of our society in terms of it becoming more and more polarized and people feeling so left behind. Like you have your job and it's never enough and houses are getting more expensive, but your wages aren't keeping up. You were kind of talking about it with the Domino story. I mean, the cost of living is surging and the price of assets is surging. So rich people are getting richer. And for the average person, they're trying to save and they're just getting crushed and squeezed. And I felt like that there's something wrong with that, because America was built on values of economic freedom and opportunity and self-determination and freedom. But when the rules are sort of rigged against you from the start, I think it creates a system of frustration and inequality where we now have just wealth concentration on one end and people feeling squeezed and left behind on the other. And I feel like we're better than that. Like the American dream represents something better than that. My parents came here from another country with me when I was little for the American dream. So I really see a lot of opportunity in Bitcoin to sort of bring some stability and allow us to rebuild our financial system in a way that is more accessible and really more fair, that doesn't advantage the rich at the expense of the poor.
Yeah, exactly. And I think it's just on folks like us or folks in the industry, right, to tell that story, to share that this isn't something, because I think that message is also getting construed a little, right? People think, oh, well, Bitcoin's for rich people. And it's like, no, guys, this is like not what we're trying to do right now. So yeah, I love that messaging, and I'm really hopeful that we can kind of keep pushing it forward. When you talk to young people about crypto, what do you say to them? Is this the kind of thing that resonates with them, or what kind of gets them interested in the space?
Yeah, so it's interesting you asked that, because just last week I was speaking to a group of seniors in a high school in Ohio, and it was so exciting because they had heard of Bitcoin, but they didn't really understand it. And most of them are not investing in things like stocks, but all of them did have a savings account. So we started the conversation there, and I was asking them if they knew how much interest they were making and what they're saving for. And like any of us, no matter what age you are, you want to be able to plan for your future, right? And the best time to start is when you're younger. I remember my parents opened up a checking account or savings account for me when I was younger. I think I had a CD. But the reality is, if you just have a savings account today in the US, you're literally losing money as the result of inflation. And if you would start to invest, which I think a lot of people don't learn about, at a young age, unless their parents are really big investors, or until later in life when they really take the time to educate themselves, you're losing out on some time to really have your money work for you, right? And so I think something like Bitcoin is really powerful, because the way I do talk about it, especially to young people, is it's a savings technology. As you get older, you're going to want to buy things, you're going to want to get a house and pay for your education, and you need something that's going to store the energy and the value of your money. And unfortunately, again, like a savings account's just not going to do it. So I think it's really exciting, and I think the younger you start in Bitcoin, the better, right? I mean, I wish I was younger when I knew about Bitcoin.
I know.
So
Right?
I just think I love talking to young people about Bitcoin, but at the same time, I will say, because maybe some of them are not really familiar with the system and the bigger picture, they look at Bitcoin and they're like, that's too expensive. I can't get into it. I'm not able to buy a $40,000 coin. And so they're more likely to take a risk on these sort of altcoins that are, pennies or fractions of pennies, because they think it's going to take off. And that's really like going to the casino. And that's what I try to let them know as well.
Yeah. I mean, and thank goodness, right? Thank goodness there's someone like yourself out there helping spread the right messages. Like we said, there's so much noise out there. Natalie, this is so amazing. Thank you so much for all this information and coming on the show and sharing your time. Where can our viewers find you and reach you and watch all the things?
Well, thank you so much for having me and for everything you do. My podcast is on every platform. It's Coin Stories. I'm on Twitter at Nat Brunell, and you can also connect with me on my website, talkingbitcoin.com.
Amazing. Thank you again, Natalie, for joining us.
Thank you.
Bye. Hey, Delano, what's up?
Hey, love the interview with Natalie.
Thank you. I know, it was so much fun having her. I am so stoked about that. That does it for our show today. Thank you so much, everyone, for tuning in. Be sure to like, comment, subscribe, hit that notification bell. Well, yes, thank you.
We'll see you tomorrow.
We'll see you tomorrow.
Peace. Hey y'all, thanks for watching. Make sure you tune in every day. Also hit that like, subscribe, and notification buttons. We'll see you tomorrow.